And we're back.
Welcome.
Wednesday morning.
Wednesday morning, March 12th. Not
March
yet
12th.
the Ides. You're obsessed with the Ides of each month.
Okay.
This one is what?
I'm not obsessed with the
Saturday?
Ides. The Ides of March are always the 15th. The Ides of other months, you did some research.
It's like the 13th
Is the
of January.
13th. Yeah. But I always thought it was the Ides of long months was the 15th. But yeah, I think this is when you disproved me because I tried to quote that the Ides of January were the 15th, thinking that a 31-day month, the Romans would have put the Ides on the 15th, but they did on the 13th. But March
It's
is
like
the
Greek
15th.
Easter. You don't really understand it.
I definitely don't get it. But Greek Easter, I think, is also on
Really?
non-Greek Easter. What were you going to say?
The other Easter? Yeah,
Normal Easter?
No, now it's like a solar eclipse year. They're together.
Okay. But it's not a leap year. Is it a leap? No.
No,
We didn't have the
25.
29th.
Yeah.
Okay.
Odd year.
But yeah, Ides of March are on the 15th. Today's the 12th. We still have 2 trading days before we get to the anniversary of Caesar's assassination.
Is that what it is?
That's what it is.
Wow. Learn
Yeah.
something new every day.
That's right. Brutus and... Man, everybody forgets the other guy, but the other guy did the stabbing first. But
Really?
he gets lost because he stabs him a little.
Just a little?
He stabs him a little bit.
He didn't mean it.
And then Brutus stabs him, and then he says, "Et tu, Brutus."
Right. But someone else got a quick one in?
But yeah, I mean, you wouldn't be saying like you as well, like you too, and you, Brutus, if someone didn't stab you first.
Man,
you know?
this is connecting a lot of dots.
Yeah.
Wow.
That's all I got.
Sorry.
For what?
Not knowing, you know.
Yeah, what kind
I'm
of
supposed to be
history?
filling in.
So like I went to pretentious high school where I learned Latin, I learned Roman and Greek history. What was the vibe? What did you guys learn?
We had people like actually real time recreating that whole instance at the Advanced Auto Park across the street. So there weren't
At
often,
Jed.
yeah. So yeah, that was always exciting.
Wait,
Had
okay,
some
you went to
real-time
school
history.
across from an auto parts store where
Yeah.
people stabbed each other regularly.
Not regularly, just a couple times.
Okay.
More than once, but yeah, I'm watching that. It's almost F1 season. You don't care.
Don't
But
care at all.
But the Netflix documentary recapping the season before is out, so that's what I've been binging.
Wow, they got a pretty good system there.
They do, and I know you probably still won't care because it's like you in soccer. You just don't even
I
want to
can't
get
believe
it.
that
You
people
don't
are
wanna
still
get it.
watching this stuff. Like,
But
it's weird.
I will say this: the Netflix, they because I watched the whole season
So the new season came out going into the new F1 season.
of last season. But I'm
and
saying
you
I
already watched the whole thing,
Well, I watched all of the like actual in real time season of the.
which had to be really boring.
Yeah, the highlights are definitely better. But all to say that the Netflix actually does a much better job of just like 8 little storylines. Like it's very succinct. It's very easy to follow. It's all like
But
hot European
this is
guys.
your whole generation, though. Is that like it's the same for any sports? You guys don't want to watch the sports, or you are maybe like a good sports watcher, but like I get the feeling that a lot of people in your generation don't watch the F1 season or don't watch the basketball season or whatever, but
like
they're
the-
like, oh yeah, like I want to watch the Netflix special about like Jason Tatum's life and like see like how crazy he is or how cool he is or whatever. And it's like, but that's not isn't
You
the
don't
point.
actually care, yeah.
Yeah, like how like strong and fast and dunky he is. you
Yeah.
know?
Netflix definitely got our generation. I'll say the worst habit is betting on sports you aren't watching. I think that's the worst.
You guys are crazy with that stuff. But whatever. I don't know. To each their own.
All right.
I'll stick with Brutus. You can stick with
But you're not even like you don't watch
Rip
history
Hamilton.
things, right?
Who's the guy?
With the mask?
But he drives the cars now. Wait, no. Who's the guy?
Lewis Hamilton.
Lewis Hamilton.
Sir Lewis Hamilton, thank you.
Sir Lewis Hamilton.
He's
but
on
he's not
Ferrari
the
now.
he's not the big guy anymore.
He can still be a big guy.
Okay.
But there.
Okay. All right.
Yeah, you're right. There's.
All right. Let's get into the platform. Take a look at what's buzzing. Holy bounce back. I didn't see this, Batman. Dollar yen is making a comeback. It's really interesting with this, man. I was looking at this earlier in the week. We internally do, I don't know if I'd get in trouble for this. I don't think it's anything to get in trouble for. Internally, we do a demo competition with the people around the office.
Good fun.
The new guy that's in charge of the the competition, Ryan.
That's your boy.
He's my boy. He decided for it's classic like new person in power syndrome.
Gotta do something.
Gotta change something. And he's like,
won't.
all right, everybody, like we're like we do it every 2 weeks, and it's like, all right, we're doing a new one. It's starting today. Everybody reset your demo accounts. Instead of $10,000, $20,000. And it's like
Welcome to the show.
and it's like, I don't know why, but sure. Just so all of the paper gains and paper losses are just double.
Because 10,000 is already like enough to.
Wasn't enough for Ryan. But anyways, he was. I of course I'm the worst at it. I'm probably the worst participant. Maybe the worst trader, but probably one of the worst participants. And so like he was like messaging the group, and then I finally saw like, oh yeah, like you have to reset it. So I reset it yesterday, and I'm looking, and I'm like, man, this dollar yen down around 147. Yes, it's a lot of it's on the potential of the interest rate gap continuing to tighten between Japan and the U.S., especially if the U.S. is going to enter a recession, which is everybody's afraid of a recession now. But you look over here, and I don't want to get too deep into it because, of course, there's risk. There's so much risk involved. When you're talking about overnight funding rates and the swap bid and offer here, it is not free money by any means. You have to have these positions on. And if you have been long dollar yen the last couple of weeks, you've been getting hammered
Right.
on the price side of stuff. So there's big risk to this. Gotta talk about that on the front end so TJ doesn't get mad. But I am looking at this. I'm like, man, this market's getting hammered. Of course, there's a Fed meeting here in March in about a week from now. Is it next week? A week from today?
Yeah, the 21st, 20th. Yeah, next week.
Yeah, a week from today. They're not even expected to cut then.
Right.
Fed Chair Powell has come out as recently as last week and said, yeah, we're of course monitoring everything, but like we're not super spooked right now. And that was actually the only bounce that
Our only savior.
the only bounce that we saw in the last couple of weeks. And you look at this, and now, of course, it's a Wednesday, so this is factoring in the weekend funding, so it's not usually this big. But you're talking about, the indicative, of course, the rates can change at any moment. Overnight funding for this market being between, 1-2 pips per night, and so over the weekend here, the indicative prices are 4 points to hold this pair long dollar, short yen. And I only bring it up again because I don't know if the price where this dynamic starts to come into play was 150 or 147 or 145 or 140.
Exactly.
That's the game
And that
at the
matters.
end of the day. But it was, when we got down here, it was starting to, and I bring up the demo competition because in my demo mind, my strategy was starting to kick in of like, oh, this is where it's starting to get kind of interesting.
Yeah.
That they've taken this dollar down. Let's get some more data on here. They've taken this dollar down from 158 all the way down to 148
this year.
So 1,000 points here. And I mean, on a percentage basis, a huge currency move in the first 2.5 months of the year. And you're still getting that positive overnight funding in the direction of long dollar, short yen. So yeah, it's nice to see a little bit of a bounce back here. It's been really just like a dollar drubbing across the board. I mean, this euro dollar is coming back a little bit, but holy smokes, we're at 109 in there. But I thought this was particularly interesting, and I'm not particularly surprised to see that the yen is giving back a significant amount of ground when you factor in the fact that interest rates haven't tightened yet. The overnight funding is still very much in the U.S. dollar direction. And if U.S. equities are going to even probably like be unchanged, just stop falling, then this yen could, give back considerable ground.
Yeah, and this one's always interesting to look at because kind of the speed and the nature of this pair. You could see a large decline over a period of a week or shorter, get to new lows, and you really are torn between, it has all of these stories going in favor of a bounce back, as you just outlined, but you also have historic precedent for once it's falling and passes some of these key thresholds, psychologically at least, that can be a snowball effect as people keep getting liquidated. And this, like we saw last year, this carry trade strategy unwinding in a big way and leading just to more and more downside.
100%. And that's why I say
all the hesitation is always there.
The risk is super real because, I mean, and on the polar opposite of everything I just said is the U.S. equity market does crash. And Powell does come out.
And he can't save us.
and we see surprise cuts. And it's actually not only the anniversary of Caesar's assassination, but we are, 5 years, I think that's how years work, to the exact time of the pandemic where we had multiple surprise cuts. Of course, not hoping for, I don't hope for the U.S. stock market to move any lower, let alone a pandemic or any reason for surprise cuts. Now, of course, that could happen. And at that point, then this thing really unwinds. But to your point, if it's turbulence, let's say, if it's short-term turbulence, which we don't know if this is right now, but we're seeing a little bit of movement in the direction of maybe this is just some short-term turbulence today, then a lot of these moves, a lot of these big, dollar losing 100 points, 200 points to the yen in a given day, I think is a lot of that liquidation effect, similar to what we've seen in crypto markets recently. There are just certain levels where people were long and they were maybe taking advantage of the carry trade from the long dollar side and I'll bounce back out to the daily chart because you'll see, this long dollar, not only from a price perspective, but from that overnight funding perspective, has been working since September of last year. And of course, you had big moves like this, but really, after catching itself at 150 here, you've been able to probably scratch most of the price action or see some appreciative price action from that side and hold that and get that overnight funding in the positive direction. But to your point, there are a lot of people that maybe were long this pair from around 150 or 152 half or 155, that when it gets down to these levels and moves through them are like, okay, I'm going to scratch my position and I'm just going to take the overnight funding that I've been gaining over the last couple of weeks or months or whatever and liquidate a huge position. And same with Bitcoin, Ethereum, getting down to these certain prices where it's like, okay, I've been long from here, and like I'm being liquidated either by a firm or I'm liquidating this position because I don't want this price risk on the table anymore. But interesting to see here a couple of days bouncing right off of that 146 half here in the dollar yen market. We'll see if they get back to 150. I mean, that's been a point. If you really zoom out over the last couple of years, and I'll actually put weekly data on the chart here and zoom in a little bit. You go back to, obviously, this is coming out of the pandemic, and the U.S. equity market really heating up, especially compared to Japan and certain parts of Asia. U.S. inflation taking off, U.S. interest rates taking off. Since this time frame, where we got up to 150, 150 has been a really interesting price that it's like we would get up to 155 and 160 and everyone would be like, holy smokes, is this thing about to be blown open? And then it would come back to 150
Right.
and we would come down to 145 or 140 and everyone would be like, this is unraveling. And then we'd get back to 150. So
Interesting.
it's in the sights again. We'll see if we hit 150 once again for this dollar yen market.
Yeah. And just waking up today, reading the news, Japan getting involved in tariff talks. Not happy
Gotcha.
about this whole metals tariff.
Uh-oh.
Apparently, they think that Japanese metal imports are very important to the U.S., and it was a bad idea.
Gotcha. Well, we'll talk more about tariffs in just a second. Really quick on the economic calendar, we have inflation coming out of the U.S. in less than an hour, expected to be slightly lower, it looks like.
Still pretty sticky.
Still pretty sticky. This is one of those that, man, I have no clue what the reaction is going to be. In Forex markets, you would expect that if inflation is even lower than what's expected, the US dollar might get really punished here. If it is actually, instead of 2.9%, it's 3%, or instead of 3.2% for the core, it's 3.3%, you might see that dollar, you might see US interest rates move higher and that dollar regain some of what it's lost recently. But then we also have, don't we have Bank of Canada today?
Yeah, I think
I must just not have it on my,
Yep.
Yeah, there we go.
8:45, I believe. Yep.
Yeah, they're expected to cut. And with that, let's go to our segment for today because you're going to walk us through a bunch of Canadian stuff. If we can transition over, I will bring up, how do I bring up the slides now? There we go.
Booyah.
Let's do it.
Yeah. U.S. dollar, Canadian dollar whipsaws as tariff tensions escalate once again, Frank. The story continues, and we saw it play out in a big way yesterday in this dollar CAD market, but starting to affect a lot of other markets now as regions like Europe and Japan start to get a bit antsy about what Trump is doing worldwide.
Before we get into the exact, the latest on tariffs, it's funny, you could say what you said where, oh man, yesterday we saw a huge whipsaw in dollar CAD pretty much like any week the last month and a half. Because, yeah, there's been so much, we're going to tariff the hell out of Canada. Actually, maybe not so much. Maybe we'll work out a deal. And we've seen now USD CAD skyrocket to 148 and then come all the way off to 142.
Yep.
It's made these short-term but large moves up to 144 and then back off to 143 or 142. So much whipsawing in this market, but great, short-term back and forth opportunity for those people getting on the other side of or even riding those trends.
Yeah,
I mean,
it's enough of a range.
Yeah, if USD CAD goes from 142 to 144 and you're riding that higher and then it goes to 148, hard to believe that you're holding out for man, I got to get to 150 on this one.
But people are calling for it. But yeah, we'll talk about it too. That does this still have legs? Will reactions stay the same? But yeah, the latest on tariffs. We had news overnight. Here, looking at the right, we have kind of a snapshot of all that's in place, all that's supposed to come out, because I'm getting lost on what's going on. But yeah, this is from yesterday, so that 25% on aluminum, steel went into place against the world last night. But what we've seen as it relates to this market is Canada not backing down, but trying to be our friends. Monday, they placed a tariff on electricity I think they supply electricity to 3 states right there on the border.
Which ones?
Minnesota, New York, and one other. And then Tuesday morning, Trump says, you can't do that. There's no reason for you to do that. That aluminum and steel tariff, we're going to double it for you to 50%. Says that, market reacts instantly. By the afternoon, Canada backs off slightly, and Trump backs off as well. So a lot of posturing there, but Canada doesn't want to lay down completely at all, it appears.
And you're
play.
watching the Formula One show? This is some high-level drama. Forget about the Formula One. We will double the tariffs.
Not 10 to 20, 25 to 50. That's pretty good.
And then we will double again.
We'll keep redoubling.
Can you double past 100%?
We're going to find out, I think, in the next couple months. But yeah, let's get to the price action. We can see exactly where these moves were. Not small moves at all. We're looking at around 0.75% to the upside and then to the downside here intraday within the U.S. session right there at 10 a.m. Coming off by U.S. market close. But yeah, just huge moves hitting 145 once again. Hasn't sustained a ton of time above 145. But yeah, this is where we were at yesterday.
And just for some context, a Forex market like USD CAD moves with a volatility of probably 6 to 8% annually.
Right.
Keep in mind, whenever anybody's quoting you a volatility, like, oh, the VIX is 24%. That's an annualized number. The expectation is S&Ps to move 24% up or down in the next year. This USD CAD market and most major USD Forex pairs move with a volatility of, like 6 to 10%. I've seen plenty of years where Eurodollar has moved with an annual volatility of 3 or 4%.
Jeez, yeah.
Okay? And so when you talk about, an almost 1% move higher and giving all of it back in the course of 5 hours, that's a massive move here, let alone the fact that, I know we'll get to the historical prices in a second, 145 is some of the high. If you took out the blip to 148 in this market, the highest price in 20 years in this market. So huge moves at extremes all around these tariffs. But yeah, walk us through some more of it.
Yeah, and so it really begs the question, because you brought up with the title, we could have stamped and repeated this weeks on end, because it appears that people are reacting to this, and people have taken these threats seriously thus far. It'll be a very interesting exercise to see if markets traders continue to price in those policy changes as quickly. And here I just have the daily range, high and low.
That's a cool little graphic, yeah.
Yep, over year to date. And so we see that huge 400 pip. That was the first tariff announcement over the weekend. And so we had a huge gap that instantly reversed. So a bit of an outlier there. But to me, we're seeing it's pretty consistent. We're still seeing some rapid moves. And I think the timing has to do a lot of this, because we saw, if you look at the end of February, we started to calm down a little bit because there wasn't any new news until March, suspended until March. This recent news yesterday was, I'm going to slap an extra 25% on you tomorrow. Yeah. And I think you have to kind of respect that.
It used to be an end of month, start of month kind of thing, where, the middle of February, it's like, okay, we're waiting until March. But this is a nice,
picked back up.
A nice graphic, because, you would have thought, if you didn't have the action in the last 2 weeks in this market, you would have thought, okay, volatility is getting crushed.
Exactly.
And we're not seeing as many big moves. But pretty consistently, you're seeing 100, 120, 150, 170 point moves across the last several weeks. But take us into the end of this, because now you have the daily chart, and you're starting to see that not only are we getting big wicks here, big moves back and forth. One, we're still really kind of tethered to 144. But two, 144 is a very expensive number historically.
Yeah, and we only have from around the election here, from last November. But as we've comparing it to a ton of other markets that have seen the Trump trade come all the way up and all the way down, or down and all the way back, depending where you're looking, this one is still higher, notably higher, 3.7% higher from November of last year. And you have cases on both sides, because you'd think that if we're in a trade war, we're going to win, and Canada will have to secede at some point lay their sword down, and that could lead to completely new heights for this market as we just enter a different economic relationship.
Well, yeah, you had some bank analysts at a month and a half ago, going into that February move, calling for 150, 155, which is still very much on the table here at 144. But yeah, it would take, I think, some new extremes for tariffs and the kind of elephant in the room, which is Canadian economy and interest rates moving lower. But
and then you have
interesting stuff.
You have the other side of it as well, that now this tariff against the world. U.S. might start feeling some of that pressure, and that if that affects our growth overall, that can easily bleed into this dollar CAD market.
Well, cool. Great segment, Glenn.
That's
Thanks
all you
for
got.
sharing. Coming up next is Tom, Tony, and Vanetta. Stay tuned, everybody. Thanks for watching. Peace.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom?